Thanks for joining my market report today. My name is Mike, and this market report is about mortgage rates. For those of you who follow, my apologies, I didn't get the reports out last week. I went on vacation and now returning. So my apologies for not having those reports out to you last week, but we are we are back and ready to roll. For those who are new to this channel, we create these videos on a daily basis and get what's impacting rates on a daily basis. We kind of let you know whether it's something on the economic calendar or if it's something like maybe some Fed conversation or what investors looking at and what's impacting rates. We don't get into so much rate quotes because there's just too much variables that go into rate quotes. But we do get into whether if it's rates are up or down or if they're going sideways. We kind of look at what the week ahead, kind of give you an idea what's to plan for. If there's a catalyst that might be something that could potentially move rates one direction or another. So we kind of give you a little guidance in that avenue as well. So if you guys are in the market to refinance or purchase, this might be a good tool for you to kind of look to see if you want to lock in the rate or if you want to kind of hold steady. At least try to give you some informed decisions as to which way to go. Uh, so a little bit about myself is I am a loan officer. I do work with a national lender, so we're here to answer any questions we can assist you with, whether it's about the mortgage process, if it's about these mortgage rates, or if you're looking for about mortgage programs, what's available out there. We're here to help you out. And if you guys are looking to refinance or purchase, please give us a try. I would love to be able to talk a little bit about your scenario and how we can help you guys out. So in the meantime, let's start off with the report. We'll start with the economic data for today. We happen to only have one today, and that is the Empire State Index. This is kind of the manufacturing data in the New York region. So back in July, we had a pretty high rating. It was like, I think this is a record here actually of 43. So anything above zero is considered improvement or expanding. And that was, of course, kind of blew out of the water in July. However, forecasts account for a drop down to 29, and it dropped much further down to 18.3. 18.3 is actually a decent number, however, but the amount of a drop is a bit of concern because they're thinking this might be a Delta variant, could be part of the Delta variant playing a role in maybe a potential slowdown here. So this is something that the investors will be continuing to watch as we go forward and more cases are happening. Whether it's hospitalizations or just people testing positive, those are things that they're watching for. So as we head in the headline news, stocks are down. We got a lot of data today. China came out with some poor data, meaning their like retail sales. People were in the month of July. People were slowed down. The retail sales slowed down, and their factory output slowed down. A lot of it had to do with more of the lockdowns of the Delta variant to try to get that under control. So this is something that kind of started the morning off. And then, of course, Afghanistan is the big news over the weekend, primarily because the Taliban took over. U.S. troops have left. We're getting more people from embassies and everything else. Westerners are trying to get out as the Taliban kind of takes over the country. Lastly, of course, as we talked about the Delta variant, we are seeing some cases, so there's concerns that maybe we have more lockdowns or more restrictions, which could slow things down again. However, this is also playing a role into the Fed. There's been talk about with the jobs data coming in a lot stronger the last 2 months. Especially this last one, they had a strong revision for the previous month. They are now thinking that the Fed could potentially talk about the tapering much earlier than expected. So initially, they thought the tapering may be brought up at the November meeting. Now they think it could be brought up as soon as September. So the jobs data for August will probably be pretty important to see, which will get the first part of September. The meeting FOMC is until end of September. However, we'll get more news, which will be kind of put more eyes on the Jackson Hole, which is towards the end of this month. In about another week, that Jackson Hole will be heavily watched because they think maybe there might be some hints as to when they might start talking about tapering. And then once they start talking about it, they don't expect it to really start happening, the pullback, until either the earliest or late part of this year, like November, December, or sometime in 2022. So those are what they're looking at. They don't expect maybe as much of a taper tantrum like we have seen in the past because it's kind of almost expected. And actually there's been a lot of big push for it too. So that means there'll be a big sell-off in stocks, and I don't really think that there'll be as much of a sell-off this time around. So without further ado, let's jump ahead, see how this is playing out with mortgage-backed securities and rates. We were up much higher. We were up about 13 basis points when I first started this, but since then it's kind of pulled back. We have to kind of watch this. We were up above the 25-day moving average, so we had some nice gains. So lenders were coming out with better pricing. However, with this recent pullback, we have to kind of watch, and lenders could potentially start repricing for the worse. So even though we're up for the day, lenders may have come in, especially East Coast, may came in with rates about this high, but may start coming, may reprice for the worse if this continues to drop further as we go. So again, we'll have to watch this. It's just under the 25-day moving average, but we were up again earlier about 13 basis points. So we lost at least 7 basis points, and if this continues, this is something that investors will watch, and probably a lot of lenders will reprice for the worse. Yet treasuries are doing the same thing. We start off way down here. We start off about the 25-day moving average. We pull back, even tried breaking below this technical level, but have kind of scaled back. We're just under 125 right now on the near treasury after touching up about 1.37 earlier last week. So last week we had some real volatile week, as you saw at the jobs data. It just started worsening, and then it came back. And then we started having some improvements late in the week here. Had some improvements like there's basically Friday was a big day for us and regained some of that. All right, folks. So mortgage rates could be potentially a little bit for East Coast. The rates could be a little bit better, but that could be changing. If you're looking at the West Coast here, as lenders start rolling out some of the rates, it could be about the same as what Friday's rates would look like. So our pricing could look more like Friday's or slightly better what we saw out there. All right, so again, we got a little bit of we got plenty of the day left, so it could go back. We could get some back that we could regain those gains, or we could lose those gains. So again, we'll have to just kind of keep our eyes on there, and it's a little volatile today. You guys have a great rest of your day. We thank you so much for your watching. If you guys like this video, greatly appreciate if you guys could smash that like button. We greatly appreciate any help you can bring to the channel. And again, I'm here if you guys got questions regards to mortgage rates, programs, anything mortgage related. I'm here to answer any questions. Have a great rest of your day. Thanks so much for watching. We'll see you in tomorrow's video. Bye-bye.